Hello, good evening to you all.
Good
Hello, can you
evening,
hear me?
sir.
Okay. You are all
Yes,
welcome
we can hear you.
you are all welcome to Flourish Professional Institute. We started our ICAG 2026, the March date, the 2026 pre-lectures. I think last week or last 2 weeks, and then we are continuing. So from what you've done previously, we have 30 marks covered already. So we've done the conceptual framework, you've done the sustainability, and you've also done stakeholder analysis. So if we are lucky enough to get these topics coming in the exam, it means that we are going to have 10 marks each under the topics that you've treated. Now, today, what you are going to do is 20 marks. And once you take your ICAG question paper, the public sector and finance paper, it is going to be the question 3 of the public sector accounting and finance paper. So whatever we are going to discuss today is 20 marks. We won't be able to finish, but if you are supposed to continue tomorrow, we would continue tomorrow. Sometimes we meet add-ons as well. So I'll communicate it on the page. If you are supposed to meet add-on, the information will be shared. Today, whatever you are going to do is under the overview of the public financial management cycle, the PFM cycle. This is our main topic for the day, the overview of public financial management cycle in Ghana. It is 20 marks, and then as I indicated earlier, you will see that when you take a PAC paper, you see it under question 3, that overview of the PFM cycle. It will carry 10 marks, and then PEFA will also carry 10 marks. So this will be under your question 3. Now, we are going to talk about the overview of public financial management, but there is a need for us to know the introduction of what public sector accounting and finance. There is a need for us to know the introduction of public sector accounting and finance. So we are going to start by looking at the meaning of public sector entities, features or characteristics of public sector organizations or entities. Then we dive into the overview of public financial management. We've been hearing or we've heard of public sector. Who can tell us the meaning of public sector entity, or what does it mean when you say public sector? Princess, what does it mean when you say public sector? Public sector entity, public sector, what does it mean when you hear public sector? Princess, are you on the call? Madam Nancy, are you on the call?
Yes, sir.
Madam, you've heard public sector. Can you please tell us the meaning of public sector?
Okay, sir. When we talk about, from my point of view, what I know is that they are state-owned entities and organizations, and which serves the public, not for profit making, but then for satisfaction of the public, the interest of the public. So when we take an institute like Ghana Water, then Electricity Corporation, and then some of the government hospitals, they are serving the public, and then they make sure they satisfy the interest of the public. So the little I can say about public sector. Thank you, sir.
Thank you, madam. So if you talk about public sector, we are basically talking about entities that are publicly owned and operated. they are publicly owned and operated. These entities, they do not exist purposely for profit-making purposes, or they do not exist for profit-making. These entities are also the central government, the local government, or all publicly owned and controlled or funded entities that delivers goods and services. Can you please meet ourselves? So when you talk about public sector is almost everything that we are seeing. Those entities, they are funded and operated by the government. I hope you understand. They are publicly owned and then operated. And then one thing that you're supposed to know is that they do not also operate or exist for what? Profit motive. You only talk about the profit motive or profit maximization when you're talking about what the private sector. So one thing that you can say, this thing, the meaning of public sector, it does not have a general meaning or something, but you can pick any of the sentences that I've given you in the notes. At the end of the day, I'll try and share the note for everyone to benefit. Basically, it is for our registered members, but I'll also talk to management and see if we can share the document. So if you talk about public sector entity, or public sector, we are talking about organizations that are publicly owned and operated. They are publicly owned and operated. And in examination, I don't think they would ask just about what is public sector. They can frame the question in a way that at the end of the day, the question will be about you writing about a public sector. So you are supposed to know that they are publicly owned and operated. And also, they do not exist for what? They do not exist for profit motive. They are just there to provide what? Services to the general public. And then they are the local government, the other entities that you know. I hope you understand. So when you talk about public sector, we are basically talking about those that they are publicly owned and funded. So that is all about what? Public sector. Now, we have various features or characteristics. There are various features that when you see about an entity, we can boldly say that this is a public sector entity. So therefore, our next subtopic that we are going to look at is what? The features or characteristics of what? Of a public sector organization. So when you say a public sector organization, what are some of the features? Can you please discuss about the features, or I should just go ahead and then let you know the point? Who can talk about the features of Mr. Osman? Good evening. How are you?
I'm doing well.
Are you driving?
No, I just came from the mosque.
Okay. What we started, I don't know if you joined from the beginning, but we started with, we are going to look at the overview of what? Public financial management.
Okay.
And we cannot look at the overview of public financial management without talking about what? The introductory part of what? Public sector. So basically we started with what? The meaning of public sector, where we came to the conclusion that they are entities that are publicly owned and what? Operated. And then they do not also exist for what? Profit motive. They just exist for what? The production of the provision of what? Goods and services to benefit the entire citizen. So we have some features or characteristics that when you see about an entity, you can boldly say that this entity is a public sector entity. So can you please tell me one attribute that when you see, or a feature that when you see about an entity, we can boldly say that this is a public sector entity? Mr. Osman. Mr. Osman. Mr. Ampre, good evening. Sen, are you on the call?
Hello, Mr. Alas.
Yes, please. I'm on the call. Please, good
Okay.
evening.
Good evening. Mr. Osman, please, you can come in. Mr. Osman,
Yes, sir.
come in. Yes, sir.
Good evening, sir. Sorry, I joined late. I went to the mosque.
Okay. Tina, did you get what I was trying to say from the meaning of public sector entity? Mr.
Yes,
Osman, so
please.
please follow.
Yes,
Kindly
please.
follow. I'll call you and then you answer the next question.
Okay, I'm following.
All right, no problem, sir. So Tina, can you please tell me one feature that when you see about an entity, you can say that this entity is a public sector entity?
All right. So please, so the public sector, they are not profit oriented.
You're
Their
not
main purpose is their main purpose is to provide to provide goods and services for the benefit of the citizens.
okay. That is fine. Madam Nancy, please, are you on the call?
Yes, sir.
Madam, please, can you tell me one attribute that when you see about an entity, we can boldly say that this entity is a profit motive entity?
Well, okay, it also has a large stakeholders. And so, like, a lot of people have interest in the public sector entity.
Okay, that is fine. Mr. Robert Ban, sir, please, can you hear me?
Sir, yes, please.
Sir, please, how are you?
I'm doing good. Yes, sir.
I'm fine, sir. Sir, please, if you see an organization, can you identify that this organization is a public sector entity?
Yes, sir. Yes, I think they are also financed by the government.
Yeah, financed by the government. That is perfect.
Yes,
that is perfect. So if you are supposed to follow the contribution, you are going to waste a lot of time. So I'll just mention them. I'll make the documents available for the benefit of everyone to have access to them, okay? So let us please go through. So when you see an entity, you can say that this entity is a public sector entity when the entity is largely financed by what? The government. So in terms of funding, everything is largely financed by what? Government. And then mostly we fund them through what? Taxes. I hope you understand. We fund them through taxes. Though we can also receive grants, we can receive donations from different sources to fund these entities. But mainly our finances, the finances of these entities are what? By the government. Public sector organizations are established to meet the interests of the public without profit motive. So Tina made mention of this earlier, that they exist for the provision of goods and services to benefit all the citizens, and they did not also exist for what? Profit motive. Now, one thing that when you see about public sector, you can say that this is a public sector entity, has to do with what? Performance measurement. So with the public sector, their performance measurement is based on what? Non-financial indicators. So mostly we are talking about what? The value for money, the efficiency, economy, and then what? Effectiveness. So mostly the performance measurement in what? In the public sector is not based on what? It's not based on the ones that you can calculate. It is mainly about what? The value for money aspect. So you talk about efficiency, we talk about what? Economy, and then effectiveness. And also, Madam Nancy made us aware that they have wider stakeholders. So public sector entity has wider stakeholder that a lot of people look up to them. I hope you understand. They report to a lot of group. They have users that wider user group that they report to. So when you see that an entity is reporting to a wider stakeholder, you can say that this entity is what? It's a public sector organization or public sector entity. And then they are also often what? Established by what? The Constitution, Acts of Parliament, and legislative instruments. And then also, one thing that you cannot also take from public sector entity is that the financial and operational decisions of public sector entities are what? Largely influenced by what? Political and social decisions. So you realize that our entities, most of our entities in what? Ghana, they are mainly under what? The influence of what? Politics. So once you see these features, you can boldly say that this is what? This is a public sector entity. In exams, they will not ask you states the features or characteristics of what? Please hold on. In exams, they won't tell you that. In exam, they won't tell you that state may be 4 features or characteristics of what? How do you call it? Public sector entity. What they will say is that they can frame the question in a way that they will ask you to identify how this entity is what is a public sector entity. So please always bear in mind that if they don't give you a straightforward question that come up with 4 features or 5 features or characteristics of public sector entity, they can give it to you in a way that you have to come up with the feature and then defend it that this is a public sector entity. Now, what then is the objective of a public sector entity or organization? If we say that come and then operate as a public sector entity, what are some of the objectives that we expect from you? Or what are some of your objectives? So they exist purposely to fulfill what? The stewardship and accountability function by the what? They exist to fulfill the stewardship and accountability function by accounting what? By accounting to the what? The public. So they mostly what? Account. We mostly hold these people accountable. So in provision of what? In provision of their services and everything, one objective is always to ensure accountability. So when we started our first topic, so we realized that we said that under public sector accounting and finance, one key, can you please mute ourselves? So when we started the public sector class, we made mention that key words that we cannot take from public sector accounting is accountability and transparency, because they run through everywhere. So always, if you are out of point and then you think you can link accountability and then transparency to what your question, please do so. So we realize that they also what we see the accountability function that we were talking about. You can see it here, and then they also exist to correct inequalities among different groups within the economy. So someone will say that I am rich, I am poor, I have the capacity to pay for this goods and services at this entity. So what happens is that the public sector entity exists. We come up with public sector entity to what? To correct or break this inequality that among different group of people within the economy. So the one objective is that to provide information for what? Measuring financial performance of what? Entities in terms of what? Efficiency, economy efficiency and what? Effectiveness. So to ensure value for money is also what? It's also an objective of what? Of a public sector entity. And then they also exist to what? Create and maintain economic and social infrastructure within the country and to provide a benefit to everyone within socially acceptable what? Norms. So these things are all self-explanatory. Once you read, you will be able to make meaning to them. They also exist to what? Fulfill the legal requirement contained in the laws that establish them. So if we're established under the laws of what? Parliament, you have to meet the requirement of the laws or the legal requirement. That's what that established you. And then they also exist to what? Provide basic services to all citizens, thus making public goods and services affordable for all and for sundry. Public sector organization, one of the objectives is also to provide services that are not provided by what? The private sector entity. So you realize that there are some services that are not provided by the private sector entity. The public sector entity will come and then make it what? Make it available to the general public. So that is that about what? Objectives of what? Public sector entity. Now, you can group or classify public sector entity based on the mode of financing and then their powers and nature of operation. So based on mode of financing and then power and the nature of operation, we can classify what? Public sector entities. So under the mode of financing, if you are supposed to classify public sector entities or public sector organizations under the mode of financing, you realize that we have various types of organizations that falls under them, or that falls under mode of financing. We have the ordinary entities, we have the subvented entities, and then we also have the self-funding entities. So when we say ordinary entities, we are saying that these entities are entities that are what? Funded wholly by what? The national budget. They are entities that are wholly what? Funded by the national budget. So these entities, we do not allow them, or the laws do not allow them to what? Make or take money from the services that they are rendering. I hope you understand. And if in any way that they make money from the services that they are rendering, then that money is supposed to be paid into what? Into the consolidated fund. That money is supposed to be paid into the consolidated fund. So if we say ordinary entities, we are saying that these entities are funded wholly by the national budget. So we take money from the national budget to what? Fund the entities. And then these entities are also not allowed to generate revenue from the services they render and where they obtain incidental charges for the services. Such monies are paid directly into the consolidated fund. Such monies are paid into the consolidated fund. So moving forward, I'm going to give you some keywords for you to go and then write them. Please write them in your notes, because I will let you snap them and then send it to me for me to go through them. I'll tell you whether they are correct or wrong. So you are supposed to find meaning to consolidated fund and then how do you call it? Appropriation. So yeah, so I think I have appropriation here already. So you talk about consolidated fund as well. Consolidated fund. So you go and find meaning to these words. I'll send them on the page for you to do that. Now, so one thing that you have to know is that after knowing that these entities are not allowed to what? Generate revenue from the services that they are rendering. But however, if it is by any chance that they make incidental charges from the services, that money or that monies are supposed to be what? They are supposed to be deposited into the consolidated fund. Now, what you have to know is that you have to also know the entities or examples of what? Organization that falls under what? The ordinary entities. So when you talk about what? The fire services, the prison services, and police services. So you realize that these entities are what? They are wholly financed by what? The budget, national budget. However, when you go to police, the police office, you realize that they make what? Incidental charges, right? So once they make incidental charges, these monies are supposed to be what? They are supposed to be deposited into what? Into the consolidated fund. And then you also have what? Subvented entities. So when you say subvented entities, so these entities, they are partly financed by what? The budget, and also partly financed by what? The IGF. When you say IGF, they are internally generated fund. So you are being obliged by a law to take money from what? Your normal activities of what? Of the business. You are supposed to make money from it. You call them what? Internally generated fund. You are making incidental charges, or you are charging amount within. So those monies are what? Internally generated fund. So once an entity is partially funded by the national budget, and also partially funded by what? By the IGF, we say what? They are what? Subvented entities. So these entities, we allow them to what? Take money from what? The services that what? They are rendering. And then we can talk about what? FDA, the public hospitals and the rest, the research institutions and the rest. So these entities are what? They are called subvented entities. And then you also have self-funding entity. So the self-funding entity, these are entities that do not rely on continuous funding of the government from the national budget. These entities are allowed to generate revenue from their operations to fund their activities. So example is what? The GBEs or the GBEs. So very soon you look at the meaning of what GBEs. Very soon you look at what the meaning of what GBEs. And then a typical example is what the university like GIMPA. GIMPA is not funded by what the national budget. However, GIMPA is mandated to what make money from the services that it is rendering. That is self-funding entities. And then when you go to classification of public sector entities by their powers and nature, we can have the central government entities, we have the local government, the statutory bodies or autonomous agency, and then the state-owned enterprises. So when you say the central government, they are in charge of what? The central administrative structure, ensuring what development and implementation of what? National policies and programs. So we can talk about the legislature, the executives, and what? The judicial. So those are what? Those people are in charge of what? They are in charge of what? The government policies and the implementation of what? Government programs. And then we have the local government entities. So the local government, they are in charge with what? They are in charge with the self-developmental what? Self-national development. So when you go to our local districts, our municipals, and then those areas, the local government agencies are what? In charge. And then we have the what? Statutory bodies and what? Autonomous bodies. When you say a statutory body, that entity exists purposely for what? A particular function. So they exist purposely for what? A particular function. So let's say a public university, your mandate is to provide what? Educational services. So let's say ICA, we can say ICA is what? It's a statutory or autonomous body in the sense that they are there to provide what? Accountancy services only, or govern the accountancy practices in what? In Ghana. And then the state-owned enterprises, when you say state-owned enterprises, these are enterprises established under the Companies Act with profit motive objective. So ECG, they are established under what? The Companies Act to come and make what? Profit. Ghana Water Company, Thermal Oil Refinery, the Ghana GCB Bank, they are all there to what? They are all there to make money. So that's about what? Classification or composition of what? Public sector entities. Please, any question? Any question? Any question? Can I proceed?
Yes, sir.
Okay. Now, we have public sector and then private sector. Therefore, there is a need for us to what? Make some distinctions between what? The public sector and the private sector. In our previous meetings, we've come to a conclusion that we have an acronym called RUDA for the distinction between what? The public sector and private sector. Now here too, we are going to look at what? Some of them. You realize that the RUDA that you were talking about, you see some of the points here, some of the points, you won't see them there. So if there is a need for you to, Mr. Abdul, you are writing on my, how do you call it? Yes, thank you. So what are some of the differences between the public sector entities and what? The private sector entities. So you can talk about what? The means of funding. You realize that the public sector, it is largely financed by what? The government. And then we do the financing through what? Taxes and then levies, other levies. I hope you understand. But the private sector, you realize that they are what? They are funded by the owners. So the private sector entities are funded by what? The owners. So it is either through shares or what? Debt capital. It's either we fund them through shares or what? Debt capital. And then you have the primary motive. So the primary motive for what? The public sector entity is that they exist to provide services for everyone to benefit. They provide services to all the citizens for them to benefit. But with the private sector, their motive is to what? Maximize the shareholders what? Shareholders what? So for profit motive. And then the stakeholders, I think Madam Nancy talked about what? The stakeholders, that when it comes to what? The private sector or the public sector, they have what? Multiple stakeholders that you are supposed to take into account. But the private sector, though they also have what? Stakeholders, but they are limited as compared to what? The private sector. The public sector. And then you have the performance measurement. So the performance measurement, I earlier stated that with the private sector, please hold on. Okay, let's continue. I earlier stated that with the performance measurement, with the public sector, we are looking at what? Non-financial measurements. So we can talk about value for money. That is the economy, efficiency, effectiveness. And now we have another one called what? The equity. And then we also have what? For the private sector. With the private sector, mainly you realize that since they are there to make profit, their performance measurement is going to be on what? The ones that you can calculate. I hope you understand. And then accountability and what? Stewardship. So we are accountable. The public sector is accountable to what? Wider stakeholder group. You can talk about the parliament, the general public, and the rest. But when it comes to the private sector, they are only accountable to what? Their regulators or the owners. And then we can also talk about what? Political consideration. Political consideration. So the political consideration under the government, the public sector, we are mainly influenced under what? We are mainly influenced by what? The political considerations. Some of the political parties will come and then say that vote for me, I'll do this, I'll provide these services. So once you vote for the person, or because funding and everything is coming from the national budget, always here under what? The influence of a particular political party. But the private sector is not like that. The decision making or they are not under what? Any political influence. They are driven by what? Social and what? Economic what? Consideration. They are driven by what? Social and economic consideration. Social and economic consideration. Now, since we have differences, basically we are also going to have what? Similarities. Since we have differences, we are going to have similarities. So they both exist to what? Provide goods and services. They both exist to what? Provide goods and services. And then both are also accountable to what? Their stakeholders. Both are accountable to what? Their stakeholders. And then both need to ensure what? Efficiency, effectiveness in the utilization of what? Resources. Though in the public sector, you realize that the government is giving you money, but at the end of the day, you are supposed to ensure what? Efficiency and effectiveness. And then also in the private sector, in the utilization of resources, you also have to ensure what? Effectiveness and what? Efficiency. And then both are also expected to be what? Socially what? Responsible. Socially responsible. So that about what? The introduction. The last thing that we are going to talk about is what? The government business what? Enterprises. Government business enterprises. So the government business enterprises are trading enterprises or bodies that are wholly or partially what? Owned and controlled by the state. So they are wholly or partially owned and controlled by what? The state. So they are trading enterprises. So you have to have it in your mind that these are the keywords that you have to bring, that they are what? Trading enterprises, and then they are also wholly owned or partially owned, and then they are also controlled by what? They are controlled by the state. So even if they are wholly owned or even if they are partially owned, control is what? By the state. To a large extent, they are financially independent, financially and what? Operationally independent. They are financially and operationally what? Independent. Hence, their financial reporting is based on what? International financial what? Financial standard or statement. Sorry, I think this thing is not correct. IFRS is not supposed to be international financial statement. So I'll modify the notes and then share it. So we realize that they are under what? International financial reporting what? Standard. Their financial reporting is based on what? The IFRS. According to the International Public Sector Accounting Standards, as standards 1. GBEs or government business enterprises are in substance not different from entities operating in the private sector. The reason is that they usually operate for profits and then they conduct activities similar to what the private sector. So the reason why the GBEs uses what the IFRS in preparation of its financial reports is that they exist for what? Profit motive. They exist for what? Profit motive. So if you exist for profit motive, then at the end of the day, you are supposed to use the IFRS to what? Prepare your report. But if you are not existing for what? Profit motive, then you are being guided by what? The public sector accounting or international public sector accounting standards. So what are then some of the features of what? GBEs. So GBEs have the power to contract in their own name. So can we say that ECG is a GBE enterprise, a GBE? Can we say that ECG is government business enterprise? Hello, can we say that ECG is a GBE entity or GBE?
Yes, sir.
Okay, so if the entity has the power to contract in their name, then the entity is what? A GBE. So at the end of the day, you won't be under any other name. If it is ECG, if it is Ghana Water, you enter into the contract or you enter into the negotiations using your company name. And then they've also been assigned the what? The financial and operational capacity authority to what? Carry on business. So at the end of the day, you can what? Generate your own finances. Operationally too, we have been given the authority to carry on what? Business. And then they also sell goods either to make profit or to what? Recover what? Cost to recover what? Full cost. So GBEs, they sell goods and services in their normal what? Course of business to either what? Make profit or full cost what? You won't make profit. By the end of the day, you have to what? Recover your cost at a full level. And then they do not also rely on continuous funding of what? Of the government. And then ultimately, it is controlled by what? A public sector entity. It is controlled by what? A public sector entity. Now, the last thing that we are going to talk about before we enter into today's agenda has to do with what? The term called a covered entity. Please note that in examination, when they ask you to define or if they ask you what is a covered entity, don't go and write anything that is different from this. Don't go and write anything that is different from this. Always ensure that your definition is going to capture any of this. If you cannot write all, we can pick like 3 or 4 and then you talk about them. So when you say a public covered entity, they are entities that include the executive, the legislature, the judiciary, the constitutional bodies, the ministries, departments, agencies, and local government authorities, the public service, autonomous agency, and a statutory bodies. So please, in your definition, make sure that you are going to ensure that everything that you are going to state in your answer will capture any of this. Don't go and state anything that is not included in this. So you can just take 3 or 4 of these entities and then include them in your definition. Any question before we start our agenda for the day? Any question? Mr. Osman, any question?
No, no question for now.
Madam Augustina Fianco, any question?
No question, please.
Okay. Princess, any question? Tina?
Please, no question.
Mr. Ampri? So can we move on?
Yes.
Okay. Now, as indicated earlier, this is going to be a 20 marks topic that you are going to do. It is made up of the public financial management cycle and then the PEFA. So in examination, this is going to be 20 marks. 10 marks will come from this side, and then 10 marks will come from PEFA. And you are going to see it under question 3 of the ICAG PSA paper. So when you take the PSA paper, you go straight to question 3. You realize that you're going to see 10 marks under the PFM cycle, and then you're also going to see what? 10 marks under what? Under PEFA, making 20. So everything that you're going to do here is basically going to be under what? The PFM cycle. It is basically 5. It is basically 5. And then you also talk about what? The public expenditure and financial accountability framework, which is the PEFA. So that is that. So you get 10 marks from PEFA and then 10 marks from what? The PFM cycle. Now, the PFM cycle is basically 5. So please learn them very well. When you take planning, budget preparation, budget execution, recording, keeping, accounting, and financing, they have subtopics that falls under it. And then they can pick any of them. They can pick any of them for you to, they can pick any of them, ask you a question under it, and then you have to provide answers to them. So please, let us follow. So PFM cycle, what is PFM? Now, when you talk about PFM, we don't basically have a general meaning or general definition for public financial management. However, we have many scholars coming up with what? The definition of what? Public financial management. So you have to know that when you talk about the PFM, we do not have a general meaning for PFM. However, we have people coming up with what? Definition. So when you say public financial management, it encompasses the mechanism through which public resources are collected, allocated, spent, and accounted for. So public financial management. What is financial management? What is management? Management has to do with planning, controlling, directing of what? Your finances. But at the end of the day, you have to know that we are working about what? We are talking about what? Public sector entity, the public. So we are basically talking about how the public raises money or collects resources, allocates the resources, spend it, and then at the end of the day, we hold those people that are in charge accountable. So when you say public financial management, the definition is that it encompasses what? The mechanisms, the processes through which resources are collected, allocated, spent, and then accounted for. So the Institute of Chartered Accountants, they also in their book, you realize that they've stated that the PFM is a system by which financial resources are planned, directed, controlled to enable and influence the efficient and effective delivery of what? Public goals. So this is the definition that you can also find in the ICAG manual. So that is that. So basically, we do not have a general what? A general definition for public financial management. But however, since you know the meaning of management, you just have to state them and then you link it to financial management. Now, in your, I think when you take this one, is it November 2024 paper, you realize that they asked the objective of an orderly public financial management cycle. So public financial management, it purposely exists for the achievement of 3 objectives. Now, the objectives are also the same as what? Outcome of PEFA. The objectives of public financial management, they are also the same as what? Outcome of PEFA framework. So if you know it under the public financial management, there is no need for you to also go and then revise it under what? Under PEFA. So all what you have to keep in mind is that objectives of what? An orderly public financial management system or cycle is the same as what? Outcomes of what? PEFA. So now, Public financial management system exists to achieve three objectives. We have aggregate fiscal discipline, allocative efficiency, and then operational efficiency. So when you say aggregate fiscal discipline, what do you mean by aggregate fiscal discipline? When you say aggregate fiscal discipline, we are always saying that now, when you see fiscal, always bear in mind that you are talking about what? Spending and then what? Your spending and then your earnings. So always we are saying that there should be an aggregate fiscal discipline. Our spending should always be within the limit of what? Our earnings. So we cannot spend more than what we are earning. So there should be what? Aggregate fiscal discipline. So our earnings is supposed to equate what? Our spending. We cannot spend more than what? Our earnings. So it means that the maintenance of aggregate fiscal discipline is the first objective of what? Public financial management system. And it deals with the interaction between revenue and expenditure. It entails ensuring aggregate level of revenue and public spending are what? Consistent with targets. So at the end of the day, government will come up with policies and what? Programs. We are saying that our expenses and then our revenue is always supposed to be what? Consistent. We are always supposed to be within what? Our expenditure and the revenue limit. We cannot spend more than what we have budgeted for. And then allocative efficiency. In terms of allocation of what? Resources. Always you should what? Allocate resources to what? Areas that are of priority. We should always allocate resources to areas that are of priority. And then we have operational efficiency. Operational efficiency. So operational efficiency, basically, we are talking about what? The value for money that we've been talking about. Always we should what? Ensure what? Value for money. Now, we said we are going to talk about what? Public financial management, the cycle of public financial management. So when you say the public financial management cycle, we are basically looking at what? The phases that the financial management is supposed to go through. So public financial management goes through phases, and each of these entails broader activities and actions. So earlier I stated that each of the functions, the cycle that you saw here, the planning, the budget preparation, budget execution, recording, accounting, and everything, they entails what? A lot of things. So you are supposed to know them. Now, you have to know that a weakness in one of the phase will affect the subsequent one. So if your planning phase is very weak, it is going to affect your budget preparation. And if your budget preparation phase is very weak, it is going to affect what? Your budget execution. If your budget execution phase is very weak, it is going to affect your reporting and accounting. And then if the reporting and accounting phase is also weak, it is going to affect what? Your audit work as well. So a weakness in one phase will automatically affect the subsequent phase. This I hope you understand. So let us bear in mind. Now, we have 5 phases under what? Under the public financial management cycle. We have the planning, we have the budget preparation, we have budget execution, we have accounting, recording, accounting, and reporting, and then we have review and audit. They follow each other. So please bear in mind that you cannot miss them. They follow each other. So let us bear in mind that we cannot miss them. So you move from planning, you come to budget preparation, you go to budget execution, you go to accounting, recording and reporting, you go to audit and then review. So what will happen is that we are basically going to take them one by one. And then we discuss it. So our agenda for today is to finish budget. To finish the planning aspect, the first phase, which is planning under the public financial management. So at our various universities, they taught us about what? They taught us planning. Mr. Osman, what is planning? What is planning? Doing your master's, you came across planning. And I think, let's say, a business-related course, even if not a business-related course, you've come across the word planning. What is planning? Tina, what is planning? What is planning? Madam Nancy, what is planning? What is planning?
Please, can I try?
Yes, sir, please try.
Yes, planning is a process of setting objectives and the processes and the logistics to achieve the objectives.
Okay, sure. Please, is it the Osman I already know or a different Osman?
Different Osman. This is a new
Different
Osman.
I have switched my laptop.
Okay. No problem.
My phone network is gone off.
So we have two Osmans on the call, right?
One.
Yes, we have two Osman.
You have to. Okay, you have to. Okay, sure.
Is that it?
Okay, so Mr. Osman, the one that just spoke, the one that gave me the definition for planning, I've offered you 20% discount. If you're going to write in March, PSA in March, send me a WhatsApp message. I've offered you a 20% discount for public sector accounting class. So you can send the message now. Now, let me talk to all of us because of the noise so that we can take it from there. So planning. Now, planning is the first stage or the first phase under what? The public financial management cycle or the system. Now, the section overview is basically going to look at the introduction of planning, fiscal policies, macro fiscal division of what? The Ministry of Finance, the fiscal strategy document, the economic policy coordinating committee, procedure for proposing policy initiative, and then fiscal policy indicators. So basically, these are the things that you are going to look at under the planning. And now you realize that we have we have the macro fiscal division of Ministry of Finance. We have EPCC. When you come, I think when you get there, I'll show you what to do, so you know what to do. Now, when you say the planning under public financial management, you've come to realize that when you say public financial management, you are looking at the way that we collect, spend, and allocate our resources, and also we account them. So when you say planning under the public financial management, you are looking at what? The revenue sources and then the expenditure needs in terms of what? Our policies, the policies that we've come up with. In terms of our policies that we've come up with. The plan is basically talking about what? We trying to identify our revenue sources, our expenditure needs. So it involves certain financial objectives. So when you say planning, you are deciding in advance what is to be done and how it's to be done. So we said that we're going to plan for our financial management. So our financial management, where would we get the money from? So we are going to plan for what? It involves certain objective for what? Your financial needs, and also you have to come up with the assessment of what your revenue sources and what expenditure needs. So basically, when you say the planning, when you talk about planning under the public financial management cycle, we are talking about revenue sources. You coming up with what? Your financial objectives by looking at your revenue sources and then your expenditure needs. Now, when we take the Public Financial Management Act 2016, which is Act 992, and the Public Financial Management Regulation 2019, L1 2378, it provides the rules and procedure for macroeconomic and fiscal policies specifically under the section 12 and 18, section 12 to 18 of Public Financial Management Act 2016, and the regulation from 3 to 12 of the Public Financial Management Regulation, it makes provision for what? The principles of what? Principles for what? Fiscal policies. And then we are also going to look at what? Fiscal policy objectives. Also, we are also going to look at what? Fiscal policy documents, and then fiscal policy indicators. We are also going to look at adherence to what? The fiscal policy, fiscal strategy document, and then suspension of fiscal strategy document. So when you take the planning stage, the key things that you are going to look at will be the principles of what? Fiscal policies. The first is principles of what? Fiscal policies. You are also going to look at what? Fiscal policy objectives. Fiscal policy objectives. You are also going to look at fiscal policy, fiscal strategy documents. And then we are going to look at fiscal policy indicators. Fiscal policy indicators. We are also going to look at a situation where the government is supposed to adhere to the fiscal strategy document. And then when do we suspend the fiscal strategy document? So basically, under the planning stage, these are the key things that you are going to look at. So in examination, the examiner can bring questions under what? The principles of what? Fiscal policy. They can bring questions under, they can ask you to state the what? Fiscal policy objectives. They can bring questions under what? The fiscal strategy documents. They can bring questions under fiscal policy indicators. They can even ask you questions under what? Cabinet adherence to fiscal strategy document and the suspension of fiscal strategy document. So basically, these are the key things that you are going to look at under the planning stage. Now, I will share on your pages the Public Financial Management Regulation and the Public Financial Management Act, so that when you take the Public Financial Management Regulation and the Public Financial Management Act, you can just go to section 12 to 18. Section 12 to 18, you read it and then you look at what we were discussing in class. You come to realize that everything that we discuss in class will be the same thing in what? In the act or in the regulation. If someone, those working at the public sector, controller and the rest, please, if you also have it, kindly send it on this one. Kindly send it on the page for your friends to benefit. The Public Financial Management Act and then the regulation. If you have it, kindly send it. Now, what is fiscal policy? What is fiscal policy? Fiscal policy. What is fiscal policy? If you say fiscal policy, what is fiscal policy? What is fiscal policy? What is fiscal policy?
It has to do with the budgeting, revenue, and how to spend the revenue.
Fiscal policy. So now, Madam Tina, can you also come in?
Yeah. So my definition will come from what you said about whenever we talk about fiscal, it's talking about spending.
Yes,
so
and then
I'll say, yeah.
Okay.
So fiscal, it can be defined as the process by which government gain their money and what they use their money for as well, their resources for as well.
Okay, so that is fine. So you know that at the end of the day, government will come up with policies and programs, right? And then we are supposed to fund those programs. So when you say fiscal policy, as our sister made mention, we are looking at the revenue and then what the expenses. So we are basically looking at the means by which government policies, the programs that we've come up with, the means by which you are going to implement them with respect to what revenue, expenditure, and what debt management. I hope you understand. So always you are talking about what revenue and expenses and then debt management. I hope you understand. Now, how do you generate our revenue? We generate our revenue through taxes. So you can also say that it refers to the use of government revenue or government taxes spending and borrowing to achieve economic stability. So when you say fiscal policy, we are looking at the policies that are being brought up. How do we fund them, or how do we implement them with respect to our revenue, our spendings, and what our borrowings? Please, do you understand? Please, do you understand?
Yes.
Okay. So if you understand, let us move on. Let us move on. Let us move on. Now, when you read, let me read for you to understand. Therefore, fiscal policy consists of tax policies, expenditure management policies, fiscal balance, and debt policies. The Minister for Finance is responsible for the formulation of fiscal policies. Now, so bear in mind that I've given you 1 point for what? The one function of what? The Minister of Finance, right? I've given you one function of Minister of Finance. So Minister of Finance is responsible for formulation of fiscal policies. Now, you can bear with me that when we started, I told you we are going to look at what? Principles of what? Fiscal policy. Therefore, you've talked about the meaning of fiscal policy. What then are the principles of what? Fiscal policies. Now, we have the guiding principles and the general principles of what? Fiscal policies. The guiding principles and then the general principles of what? Fiscal policies. Please listen to what I am going to say. Kindly listen to what I'm going to say very well. In examination, the guiding principles and the general principles, they can ask you to state them like how we have them here. However, they can also give you a scenario, or let's say a summary about, let's say, 5 points or 4 points, and then they will ask you to answer them in relation to the guiding principles and then the general principles. Please, I hope you get what I'm trying to say.
Yes.
Class, please, you understand what I'm trying to say?
No, please come again.
Madam, please, I'm saying that, and it is to all of you, in examination, this is how the question is going to be asked, or this is how the question will be said. It's either they ask you to state or explain that this one, the guiding principles and the general principles that we have here. So with those ones, you just state them, you write them, and then you explain. Or they will give you a sentence, let's say 5 sentences or 5 statements, different statements, and then they will ask you to what? Answer them in relation to the guiding principles or the general principles of what? Fiscal policy. Do you understand what I'm trying to say?
Yes.
Yes, please.
Okay, so if you understand, bear in mind that that is how the question is going to be asked. Now, what then are the general principles of what? Fiscal management or fiscal policy? What are the general principles? So bear in mind that I said we have the general principles and then we have what? The guiding principles. So in exams, they can ask you the guiding principles or they can ask you the general principles. Don't learn one and leave one. Always learn both. And everything that we are asking is going to be what? Examinable. This is also to inform you that tomorrow we are not going to have our normal class. However, we are meeting for class test. We are meeting for a short question and answer, session. Mr. Osman, Tina, can we do that? Or you are not prepared?
Please, what time?
4:30
PM.
AM.
AM. Oh, okay, that's okay.
Mr. Osman.
For me, that's okay.
Or we should postpone the quiz. Should you postpone the quiz?
Some of us just
Yes, please.
Okay.
Some of us just joined.
Okay. So those that just joined, we have done stakeholder analysis. We've done governance in the public sector. We've done conceptual framework. And then this is our 4th topic. So please, I will share the materials on the page for you. I will also forward the videos again. You have the YouTube links on the platform. Go and then watch them. Sunday, dawn, before you go to church, we are meeting for a short quiz. We are meeting for a short quiz. We are meeting for a short quiz. Now, let us continue. Mr. Osman, so you have to join. You have to join.
I'll join.
Okay. If you don't join,
So the quiz will cover all what you have done or
yes,
only this topic.
all what you have done, sir.
Okay.
And then there won't be past questions too. There won't be past questions. So don't go and learn past questions. I'll come up with new questions.
Okay.
Okay, sir. So general principles of what? The fiscal policy or fiscal management. So please, once you see fiscal management, it's the same as what? Fiscal policy. We are saying that the principal account holder and then the principal spending officer of a covered entity shall be accountable to Parliament for the performance of their function with respect to the implementation of these fiscal policies. So at the end of the day, the government will come up with its policies, its programs that we want to achieve this for 2026. Now, for a covered entity, we've seen the definition of a covered entity. We said they are made up of what? The autonomous entity, the MMDAs, right? The executive, judiciary, and what? Legislature. I hope you understand. And then the local government as well. So those entities, we are saying that we have people that they are in charge of what? Their finances. When you say the principal account holder is a government appointee, like the MCE. The DCE is a principal account holder. So the difference between a principal account holder and a principal spending officer is that principal account holder is the political appointee of a covered entity, where the principal spending officer is the administrative head of the covered entity. So mostly the CEOs are the principal spending officers. And then the DCEs, the MCEs are the principal account holder. So whenever you go to a covered entity and then you have the CEO, the CEO is a principal spending officer. Moving forward, you are going to look at the functions or responsibilities of a principal account holder and a principal spending officer. So moving forward, you talk about them. So one of the general principle is that these people, we are supposed to hold them accountable in terms of their performance of their function at the covered entity that they handle. I hope you understand. In the implementation of these fiscal policies, we are supposed to hold them accountable. So principal account holder, principal spending officer of a covered entity shall be accountable to Parliament for the performance of their function with respect to their implementation of fiscal policies. The second one is also saying that fiscal policy shall be developed in a manner that takes into consideration or that takes into account the impact on the welfare of general current population and future generation. Mr. Osman, this thing that you have here, what then will come into your mind? What are you trying to talk about here? Sustainability, right? That you should always take into consideration.
Yes,
Mr. Aruna, right?
And the welfare of the citizens.
Yes. So we should take into consideration the welfare of the current population and the future generation. So every decision that you are going to take in terms of our fiscal policy, it should be such that the impact on the current generation will not be that negative, and also the future generation that will come, it will have a negative impact on them. Now, we are also saying that fiscal policy shall be conducted in a manner that avoid abrupt changes in the evolution of macroeconomic and fiscal indicators. Fiscal policy shall be conducted in a manner that avoid abrupt changes in the evolution of macroeconomic and fiscal indicators. Now, it means that Government should not make big or sudden changes in taxes, spending or borrowing because it can confuse businesses, citizens, and the economy as a whole. I hope you understand. So we shouldn't make like big changes in our macroeconomic policies. So we cannot just say stand up and say that inflation is just going up. There is going to be high unemployment just like that. We cannot just say that within the next 3 years or 5 years, we are not going to employ people to come and then come and fill the public sector. We cannot also say that we are going to be, there's going to be inflation. Like it's supposed to be a gradual something. You move from one stage to another stage. You cannot just come up with a big or a sharp changes just like that. It always businesses and the citizens as a whole, they are going to cry. I hope you understand. So our fiscal policy, the policies that you are coming up with, always it should be in a manner that the changes is going to be gradual, a gradual process. You move from one step to another. It shouldn't be a big or it shouldn't be a sharp one. Please, I hope you understand. And then
Yes.
The management of public fund assets and liability, including natural resources and fiscal risk in the country, shall be conducted in a prudent way with a view of maintaining fiscal sustainability. So in terms of in terms of your public finances, your assets, and then even your natural resources, always you have to take into consideration possible risks that will be associated with them. If you are going for loan, you should look at the risk of the loan. In the near future, is it going to affect the people that will come? Currently, how is the loan going to affect us? If it is your asset, you look at it. If it is your liability, you look at it. So that is all. So the general principles, they are 4. So you can talk about the management of public fund, assets and liability in a way that, in a prudent way, that is going to maintain fiscal sustainability. And then you can also talk about accountability of the principal account holder and the principal spending officer. You can talk about the taking into account the impact of the consideration of the welfare of current population and the general future generation. You can also talk about the avoidance of the changes in macroeconomic and fiscal indicators. So these are the the general principles of fiscal management or fiscal policies. So the question can be set in a way that maybe we had COVID-19, right? Please hold on, let the car go first. Okay, so can you continue? Can you continue?
Yes.
So now, I was using COVID-19 as an example. So let's say COVID-19 came, right? And at the end of the day, if COVID-19 came, we are supposed to come up with our fiscal policies. So now we are going to say that the Veronica bucket, the sanitizers and everything that was sent to the MMDAs and the rest, other covered entities, the public account holder and the principal spending officer, they are supposed to come and account to the general public. This is what we are trying to say. I hope you understand. And then the question can be set in a way that it is going to fix these general principles that we have here. I think in your question bank, I'll check the question bank. We have a question like that. I'll check the question bank and send it to you. And I also come up with my own question, taking into consideration a different aspect. If it is not covered, I'll look at a different scenario and then I'll give you a question on that. Now, we have the guiding principle, and then the guiding principles are 5. Guiding principles, they are 5. So the guiding principles for formulation and implementing fiscal policy objectives include sufficient, revenue mobilization to finance government programs. Sufficient revenue mobilization to finance government programs. So we are saying that government must be able to raise enough revenue to be able to pay for all its program they want to provide. So at the end of the day, you want to come up with big push. This afternoon I saw on social media the park chairwoman. What is the name? Abna something making making contribution, and it was perfect. It was perfect. So there should be you are coming up with big push. There should be enough money to ensure that the big push program is going to be successful. You'll be able to pay all the contractors. You'll be able to pay all the people that you are bringing on board, and then maintenance of maintenance of prudent and sustainable level of public debt. Maintenance of prudent and sustainable level of public debt. Government should borrow carefully. We are saying that here we can say that government should borrow carefully so that it can pay back without causing financial problems for the country. So in terms of management of your public debt, always go for loan that you'll be able to pay on time. Don't go for loan that you come and then it puts pressure on the ordinary Ghanaians. I think recently they came up with a figure that every Ghanaian is owing how much? How much is every Ghanaian owing? So before you go for loan, always
3,000 cedis.
Yeah, so if every Ghanaian is owing 3,000 cedis, imagine. So before you go for loan, government should always borrow carefully so that it can pay back on time without causing problems to the general public. And then another fiscal guiding principle is also to ensure that there's going to be fiscal balance, or fiscal balance is maintained at sustainable level over the medium term. So in public sector, or when you say medium term, you're basically looking at 3 to 5 years. So ensuring that the fiscal balance is maintained at a sustainable level over the medium term. So here you are saying that government should make sure that its spending and revenue are balanced over time so that country does not run into financial trouble. It must not spend more than what it earns. So this basically, since we have fiscal balance here, and fiscal is what? Fiscal is revenue and expenditure. They should be balanced. So we shouldn't spend more than what we earn. And the management of fiscal risk in a prudent way or prudent manner. Management of fiscal risk in a prudent manner. Government should identify possible. I think this one we've talked about it here, but it is saying that government should be able to identify potential problems that could affect the finances. So government should always take into consideration risk like natural disasters, and even like issues like COVID-19 and the rest in formulating it fiscal policies. I hope you understand. You should consider those risks as well. And then in terms of even you going for loans and the rest, you have to look at the repayment policies. If it is going to aid you, you have to look at you have to look at the risk associated with your borrowings and the rest. And then another thing has to do with you achieving efficiency, effectiveness, and value for money in your expenditure. So basically, these are the 5 guiding principles that we have. These are the 5 guiding principles that we have. Now, what then is the fiscal policy objective? What is our fiscal policy objective? So they can ask you this just for 5 marks. So under section 14 of the Public Financial Management Act 921, you will see the objective of fiscal policy. And then the prime fiscal policy objective of government is to ensure macroeconomic stability of the country. And if you are saying the government is to ensure macroeconomic stability, we are saying that government should keep inflation under control. Government should avoid you should always avoid sudden high unemployment. And also, we should ensure stable currency and financial system. So if you want to what, if you are saying that what is our fiscal policy objective, our fiscal policy objective is always to ensure macroeconomic stability. We are talking about what the unemployment, we are talking about inflation, we are talking about currency and the rest. So always our unemployment shouldn't have high unemployment level. Our inflation should be stable, like high prices should be stable, and also our currency should also be stable. And then we move on to what is called fiscal strategy document. The fiscal strategy document. We are saying that what is fiscal strategy document? So fiscal strategy document basically is a document that outlines the revenue, expenditure, and what debt management decision of government that influences the economy. So basically, we are coming up with what? We are coming up with a document. So basically, we know that our fiscal is what? The debt and what? The revenue. So it's a document that contains the what? Or that outlines the revenue, expenditure, financing, and debt management decision of government that influence what? The decision. Now, when do we approve fiscal strategy document? When do cabinet? So they can ask you this one in examination. Approval of what? Fiscal strategy document by the cabinet. So when do cabinet approve fiscal strategy document? So cabinet shall approve the fiscal strategy document not later than 25th of June of each financial year. So 25th of June of each financial year. Government is always supposed to ensure that the fiscal strategy document is approved. And if cabinet is supposed to ensure that the fiscal strategy document is approved, we can clearly say that this is one function or one responsibility of what? The cabinet. So cabinet ensures the approval of what? Fiscal strategy document. And then the Minister of Finance comes up or prepare the fiscal strategy, fiscal policy. I hope you understand. We can also be asked about the publication of what? Fiscal strategy document. Now, the Minister of what? The Minister of Finance, the Ministry of Finance is always supposed to ensure that the fiscal strategy document is going to be published on their website 1 month after its 1 month of what? Of its approval. 1 month after the approval of the fiscal strategy document, it is supposed to be what? It is supposed to be published on the what? On the website of what? The ministry. So the Ministry of Finance is always supposed to ensure that 1 month after the approval of the fiscal strategy document, it is going to publish it on all the various websites that it is having. Now, we can talk about what? They can ask you to state 5 or explain 5 content of what? The fiscal strategy document. Now, we are saying that fiscal strategy document, it outlines the policies that the government is trying to come on board in terms of its revenue, debt management decision, and an expenditure decision. So we are saying that it contains the medium-term fiscal strategy, medium-term fiscal framework. Please go and find the meaning of medium-term fiscal framework. Add it to the keywords. They can ask you medium-term fiscal framework. So the content of the fiscal strategy document, we are saying that the fiscal strategy document contains the medium-term fiscal framework of the government with measurable fiscal objectives and targets to guide the short and medium-term fiscal planning for the ensuing 3 to 5 years period, consistent with fiscal principles and fiscal policy objectives. So here we are saying that a part of the fiscal strategy document shows how the government plans its revenue and its spending for the next 3 to 5 years. So it contains a document that has to do with how government is going to raise revenue, how government is going to spend revenue, and then it is going to be in relation to the medium term And I earlier stated that medium term is what, 3 to 5 years. So part of the content of what the fiscal strategy, or part of the fiscal strategy document, is coming up with what the document that shows what the plan for the revenue generation and then the expenditure aspects. It also has to do with updated and comprehensive. It contains the updated and comprehensive medium-term macroeconomic and fiscal forecast covering current development and multiple-year projection. So please, once you read, you realize that they are something that you can find meanings to them. It also contains the medium term, so we also have to find the meaning of this medium term expenditure framework. So if you know medium term fiscal framework, you have to know medium term what expenditure framework. So we are saying that the fiscal strategy document also contains the medium term expenditure framework of the government with a resource envelope and overall spending or ceiling. It also contains a statement of policy measures of the government, and then a comprehensive and quantified fiscal risk statement. It also contains the debt management strategy for the medium term, and then it also aligns with what? It contains the alignment of statutory and other marked funds of to the national macro fiscal goals and targets. So please, once you are reading, you realize that these are these are the content of or the items that are something that forms part of that forms part of the fiscal strategy document. And then don't do shortcuts. Always try and then find meanings to what you are trying to write. So if it is a medium-term fiscal framework, you can say that it contains medium-term fiscal framework of the government. So you can end it here and then you find meaning to it. It also contains an updated and comprehensive medium-term macroeconomic and fiscal forecast. So you can end it here and then you make meaning to it. Medium-term expenditure framework of the government. So you can say it contains a medium-term expenditure framework of the government. You end it here and then you make meaning to it. You realize that they are very long, so you have to come up with a way that you would remember some of them. And then now, what are the procedures for us to follow in terms of making initiative for our policy? So procedure for proposing policy initiatives. All these things that you are talking about, they are under the regulations and the act. So once you take them, you realize that you would find meanings to them. So under the regulation 11, proposal for policy initiative is to be included in fiscal strategy document, budget statement, and economic policy, and shall be accompanied with a comprehensive concept note on the policy initiative, including the name of the agency or institution, and a comprehensive concept note on the policy initiative, including the name of the agency or institution proposing the policy, the name of the implementing agency, and the objectives, purpose, and intended outcome of the policy. So we are saying that before you can even come up with before you can come up with your
policy
initiatives, there are some things that you are supposed to include in your fiscal strategy document. So always try and then go through this. You are supposed to ensure that before you come up with your policy initiative or before you propose your policy initiative, these 3 things that you have here, 3 points that we have here, always you are supposed to include them in your fiscal strategy documents. Now, fiscal policy indicators. When you are solving for this one, when you are solving for, I think, the ratios, you come to understand this. So let us skip this for now. Everything that we have here, you are going to see that you are going to find its ratios. But once you talk about the fiscal policy indicators, you are saying that it contains the non-primary balance or non-oil fiscal balance as a percentage of gross GDP, and any of these two fiscal policy indicators. So these ones, once you are solving for the ratios, you make meaning to them. You are going to find their meaning, why they exist, and then how you are going to calculate it. So let us skip it for now. Now, cabinet adherence. So you realize that from the beginning, I told you that you're going to talk about cabinet adherence. When do cabinet adhere to what? Fiscal strategy document. So governments will adhere to fiscal strategy document when they are making decisions with implications for what? Public finances. So when cabinet is making decisions in terms of public finances, they are supposed to adhere to what? Or they are supposed to go according to what? The fiscal strategy document. When cabinet is determining, formulating and implementing policies of the government, cabinet is always supposed to what? Adhere. Cabinet is supposed to follow the fiscal strategy document. Cabinet cannot do what they want to do just like because they are cabinet. We have fiscal strategy document that is being what? And that is being implemented, that you're supposed to, or that is being brought up that you're supposed to follow as cabinet. So when cabinet is making its formulation in terms of what? Policies or implementing policies, they are supposed to what? Follow this one. They are supposed to follow the fiscal strategy document. And when cabinet is performing any other function conferred to it by what? Or conferred on it by what? The constitution, government is supposed to adhere to the fiscal strategy document. Now, our fiscal strategy document or our targets or our rules, when do you suspend them? When do you suspend them? So we suspend them when there is what? A natural disaster, when there is a public health pandemic like COVID-19. So when there is a public health pandemic, you have to suspend your rules or target for the what? For the year. If it is 3 years policy, you have to suspend it. So you can only suspend it when there is a natural disaster, when there is a public health epidemic, or when there is war. When there is war, or when there is a state of emergency. So like Galamsey, you'll be saying that, oh, let us declare state of emergency. So you can only suspend your rules or your targets when there is state of emergency, when there is health epidemic, when there is what? A natural disaster, or even when there is war. Because once there is state of emergency, nothing is moving on. Nothing is moving on. And then when there is unanticipated economic shock, including commodity and oil prices shock. So once you see that there is an unanticipated, I think you can give meaning to these ones, right? Unanticipated economic shock. Things will come up just like that. You don't plan it and then boom, it will happen. So once these things are happening, you are also supposed to what? Suspend your what? You're supposed to suspend your rules, and then you're supposed to suspend your targets. Now, bear in mind, whatever I'm coming to say right now is very important. So please bear in mind of whatever I'm coming to say right now. Let us know that the suspension of the rules or targets can only be carried despite the occurrence of the event when the Minister of Finance is of the opinion that the implementation of any of the fiscal targets or rules will be unduly harmful to the fiscal and macroeconomic or financial stability of the country. In suspending of the rules or targets, the Minister of Finance shall submit a memorandum to the government to request for approval to suspend any of the rules or targets in the fiscal strategy document, providing the following information. So we are saying that in suspension of our fiscal targets or fiscal rules, if the Minister of Finance sees that, or if the Minister of Finance is like of the opinion that it is going to be very harmful to our macroeconomic stability, the Minister of Finance is supposed to provide the following information on the reasons why the suspension is needed. One, we can talk about the reason why the implementation. The minister is supposed to give reasons to the minister is supposed to, how do you call it? We are saying that the Minister of Finance shall submit a memorandum to Cabinet to request for approval to suspend any of the rules or targets in the fiscal strategy of providing the following information. So the information should contain the reasons why the implementation of the fiscal rules or targets will be harmful to the finances and macroeconomic or financial stability of the country. So always the Minister of Finance is supposed to give reasons why the implementation of the targets will be very harmful to our macroeconomic stability. And then the information that the minister is also going to provide, the minister is also supposed to provide that information with relation to period within which the suspension will occur. So that is the period within which the fiscal rule or target is to be suspended. And then the fiscal adjustment, the adjustment plan setting out the measures to return to a position of compliance. So the Minister of Finance is also going to provide us information on the plan, the adjustment plan, about how we can, it's like you resetting the agenda. So if you want to come up with a plan, you have to come up with a plan about how at the end of the day, you come up, we are going to be on track. So these are the information that the Minister of Finance is supposed to include in the suspension of the reason why he thinks the suspension is going to be very harmful. So that is that. Any question? Any question? Any question?
Hello, Mr. Las.
So,
in case of disaster, can the minister wait for cabinet approval?
Yeah. So, before they will suspend it, there's supposed to be approval first from the government, from the cabinet. I hope you understand. But
like in the case of the war.
In the case of the war, they will, how do you call it? The minister cannot take all the rules into his own hands. I hope you understand. So right now, I think we have various ways of even meeting online. So they can just have a quick online meeting or something, and then they will suspend it. It is going to be more of in a resolution meeting, like how you've gathered here right now. I hope you understand. So it won't be like a difficult process or something, like how the COVID came. COVID came as a shock, right? And at some point you were like, oh, it is not going to reach Ghana, or Ghana, no one is going to be affected. Or those that you are saying you are affected, it's a scam or something. But at the end of the day, you realize that it affected our economy, right? So government have to cabinet they have to meet and then ensure that they will put some suspensions to some of the districts. That is why you were able to have the lockdown and the rest.
Okay.
Yes.
Thank you very
so
much.
Always there should be suspension. Always, sorry, I said there should be suspension. There should be approval before there should be approval before the suspension. But since we have the state of emergency, I think cabinet can also declare state of emergency right now. And the government or the president can do that through the cabinet, right?
So can't it be done before cabinet approval?
Well, it can be done if it is. It can be done.
It's an emergency.
It can be done if it is very serious. It can be done before the approval.
Okay.
We also have to check. You have to check the situation, how it is going to affect the economy. So like Galamsey or something. That one, I hope you understand.
Yes, please.
Any question? Yes. Any other question? So those that you have registered already, and then those that you are about to register. When you take the planning, there are, I think, 4 things that I didn't add them in my notes. I want you to go and then read on them and then add them, write them in your notes. I will let you send them to me and then I will inspect it. If you are supposed to use a PSA manual to do it, use the PSA manual to do it. And make sure that you are going to revise them every day. You are going to revise them every day. They are very questionable and then they are examinable as well. So you realize that I've given you an assignment So you are supposed to go and then write 5 responsibilities of the macro fiscal division of the Ministry of Finance. And then you are also supposed to write or explain 5 responsibilities of fiscal risk management. You are also supposed to mention 5 fiscal risk management statements to be included in the fiscal strategy documents. You are supposed to give or explain 5 responsibilities of risk management committee. You are also supposed to outline. You are supposed to outline the composition of the fiscal risk management committee. You are also supposed to outline the composition of the EPCC, the Economic Policy Coordinating Committee. And then you also come up with 5 functions of the Economic Policy Coordinating Committee. Before we are going to have our first mock, we are going to write 2 mocks before you write the ICAG exams. So I am going to provide you with a document that will contain everything that I've listed here. But for now, I want you to go and then find meanings to them yourself, and then you start learning them, especially the EPCC. And then I am not only taking EPCC out or something. Almost everything here, they can ask you in the exam. So please note that. And then before you also find for their responsibilities, know what they do. Know what they do. If it is macro fiscal policy division under the Ministry of Finance, what did they do? Make sure you do your research, and then we come to a conclusion that this is what they do, this is what they do. You write everything in your notes before you even write the responsibilities or something. Do you understand? Any question?
Please, I want to find out whether you are going to share this slide with us.
Madam Nancy,
yes.
So this slide is for the registered students, but I'll do you a favor by sharing it with you. I hope you understand. And
yes,
everything in the slide is automatically coming from the ICAG manual. So even if you don't have the ICAG manual, do not panic. Forest Professional Institute, you have got you covered already. You have got you covered already. Our materials are detailed enough to help you pass the exams. So do not worry at all. The only thing is that the truth is we are doing the IFRS class and the IPSAS class offline. So you start giving the videos out. You give you the YouTube link for you to go and watch, because you can see that even I think about 23 people joined the class, and then we are left with 16. So always, if you're supposed to do it live, the facilitator is supposed to rush from work and then come to the house. Today like this, I have to leave work around 4 p.m. because of traffic. So you do some of the recordings offline and then post them. But I'll share the materials with you. Don't worry at all. Don't worry. Any questions? Any question in relation to registration and everything? Let me pause the video so we can have a personal discussion. We are done for today. So if you don't meet tomorrow, we are going to meet on Friday. I have to check my busy schedules first. So you meet on Friday, and then you continue with the phase 2. You continue with phase 2. So let me pause the video. Let me pause the video for us to have our personal discussion.
Friday, what time?
In the evening. So because of our Muslims, let us do it 7 p.m. or
for 2 hours.
Yes, for 2 hours or 1 hour 45 minutes.
Okay.
Okay.